Hello and welcome to the Weekly Outlook at XM.com. The spotlight next week will be on another round of inflation releases, and specifically how that data will affect the ECB's rate path and the euro, as well as the Bank of Japan's direction and the yen. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, let's start over in Europe, where we'll get the inflation report for the Eurozone on Friday. How has the economy in the euro area been doing recently? And how might the upcoming data impact the ECB's rate path? Do you think the euro will continue to rally?
Hello, Maria. I think we are reaching the end of this rally, but allow me to unpack that. So it's been a fantastic month for the euro. We've seen a lot of bets that the European Central Bank is going to continue raising interest rates, and that has helped to lift European yields and make the euro into a more attractive investment destination. Now, the euro has also capitalized on the weakness that we've seen in the US dollar and even more so in the Japanese yen lately. Now, looking ahead, the question is, does this euro rally still have some juice left? Now, we're going to get the inflation data on Friday, and what we've seen in recent months is that inflation in the euro area has been steadily declining, and this probably continued in June because the latest business surveys showed that companies raised their selling prices at the slowest pace in over 2 years. So inflation is coming down. The euro area economy is stagnating. In fact, the economy is in a minor technical recession. So what that suggests to me is that the European Central Bank it will be difficult for the European Central Bank to exceed what the markets have already priced in. The markets think that the ECB is going to raise interest rates another 2 times in the coming months. Now, with the economy slowing down and with inflation cooling, it will be very difficult for the European Central Bank to deliver more than that. So the euro cannot really rely on any further support from monetary policy. So the euro could still rally if other major currencies continue to depreciate, but by itself, I think that this rally is unlikely to receive any more fuel from the euro side of the equation. So we might be approaching a local top for the euro.
Moving over to Japan now, the yen is sinking. Can you tell us about the current rhetoric coming from Bank of Japan officials and how the CPI inflation data for Tokyo, also due out on Friday, may affect the bank's actions going forward?
Definitely. So the yen has been devastated by the Bank of Japan's refusal to tighten monetary policy. And of course, the yen's losses have been heavier against currencies that are backed up by hawkish central banks, namely the euro and the British pound. So with the yen going into free fall, we've seen Japanese authorities warning about FX intervention again, something they did twice last year. Now, the problem, or rather the issue with that, market participants don't really seem afraid of FX intervention. Implied volatility in dollar yen has been falling very steadily for months now. So it seems that bank dealers, investment managers, and other big players, they are not really hedging against any massive movements in the yen. They see the risk of intervention as being relatively low. And that, of course, coincides with the intervention rhetoric from Japanese officials. Yes, they are warning about possible FX intervention, but they haven't really dialed their warnings to peak levels yet. The finance minister has been very measured with the phrases he has chosen. So it seems that intervention is not imminent. So with the risk of intervention appearing low, the yen's best chance for a comeback, I think, would need to rely on speculation that the Bank of Japan might tighten policy at its meeting next month. Of course, we get the Tokyo CPIs on Friday, like you mentioned, and those are going to be extremely important about setting expectations. Now, the forecast is for the core CPI rate to have risen a little bit in June, but just barely. And I think such a minor increase would not be enough to get the markets excited about the Bank of Japan tightening policy in July. So what that means is the yen may continue to suffer for a while longer.
And finally, is there anything else investors should be on the lookout for?
Definitely. So we also get the core PCE price index from the United States, also on Friday. It's going to be quite important in setting expectations around the Fed. What we've seen lately in the US is a game of chicken between the Fed and the market, with the Fed saying that they will probably raise interest rates another 2 times this year, but investors are only pricing in one additional rate hike. And of course, the incoming inflation data in particular will be crucial in deciding who is correct in this question. And of course, the dollar is going to move accordingly. Now, what we've seen the dollar lately, the dollar has been under pressure this month, partly because of this skepticism that the Fed might not deliver what it has signaled, but partly also because of the euphoric mood that we've seen in the stock market lately, which has diminished safe haven demand for the dollar. Now, looking ahead, I see some scope for a recovery in the dollar. The US economy seems to be much more resilient than its competitors, and the summer months could be marked by a tighter liquidity environment because the Treasury continues to raise its cash levels. So that combination might be enough to help the dollar recover, especially if we see the euro cooling down a little bit as well.
Marios, thanks so much. And thanks for joining us at xm.com for this weekly outlook.